show you love my God first out. Yeah. He's name special for your stuff. Yeah. He's name scala so that's. He's name scala so much.
What's up YouTube, CFX here back with another video, and in this video I want to talk about how to be consistent when it comes to trading. And there are many things that plays into that, but you already know the first thing is your mindset. You want to make sure that you have a good mindset, and we talked about that in the first video of trading psychology. Now let's get into the actual framework. So you always want to get into your trading ideas. And what I mean about that is the quantitative framework of your trade ideas, which is how many trades you want to take. If you're going to take 3 to 4 this week, or if you get down marking up your charts, let's say on Sunday night, and you see, okay, there are a couple trade setups that I may be able to take this week. You know, let me see which ones are my favorite, or if all of them sets up perfectly, then you want to manage how you may want to take those trades. So once you figure out how many trades you want to take, then it gets into the market framework. So when it comes to the market framework, you want to get into the trends, the cycles of it, and is it a slow or a fast market? So with the trends, very easily, you already know you want to dictate if it's a up or a down trend, and it's best to look at these trends going down from a top-down analysis. So look at it from the weekly. What type of trend are we on in the weekly? Where are we at in the market on a weekly time frame? Then go down to the daily. Same thing, repeat that process. Look at the trends and look at where you are in the market. Are you in the middle of a trend? Are you at the top of the trend where it may reverse? Are you at the bottom of the trend where it may turn into a reversal? You know, things like that. And then you go down to the 4 hour and 1 hour and so on and so forth to where you actually get to your entry. But it is very important to realize where you are in the market, no matter what type of trader you are, whether you're a day trader, scalper, swing trader. It's very important to know where you are in the market, because that really can dictate your trade and also let you know what type of direction the market may be ready to go in when that time comes for you to enter that trade. So trend. Next, the cycles. The basically, I guess you could say, like consolidation in between your markets. So let's say it just made like a drastic move down, and then you enter consolidation, and now you're looking at your cycles, understanding, okay, it may consolidate for 2 hours or 3 hours before it makes its move. It usually consolidates for 4 hours before it makes its move. Understanding things like that about your market. Now, no, it's not very consistent every single day that the market consolidates. You know, sometimes it may consolidate for a shorter time period, or it may consolidate for a longer time period. That may depend on what news may come out that day. So understanding the news and stuff like that. But it's very important to understand your consolidation cycles as the market goes on. Like, you can easily go over Bitcoin. Okay, let's go over Bitcoin for a minute. So we know that whenever Bitcoin makes a big jump, it usually falls back down, and then it'll consolidate for a while. Some people say it'll consolidate for like 2 months before it makes another drastic buy up, like it usually does. So understanding things like that about your market that you are trading in is very, very, very important. And then lastly, we get into a slow market and fast market. So let's dive deeper into that. So with a slow market and a fast market, also plays on consistent risk management and also opportunity management. So how can a slow market and a fast market also play part on how much you are willing to risk, or how much you should risk on a trade? So let's say, for example, with a slow market, you all know that it may not move as much. It may not go for a bigger move as it would with a faster market. So some people may put a bigger lot size, but go for a smaller amount of pips to make up for that gain in their account, or make up for however much they are trying to make with a certain percentage. So you could work it like that, but also make sure that you are understanding that even though you are making or risking a bigger lot size, you can also lose more on the other end as well. So it is very important to understand that. Now, with a fast market, some people may risk less because they understand, okay, I have a higher chance of gaining more pips, so I'm willing to risk less. And then they may add on as the trade goes on or whatever, which gets into opportunity management. So with a slow market, you guys understand that the market may not move as much, or it may not make as a drastic as a move as a fast market would. So let's say with a fast market, they will maybe add a little bit more to their trade, or they may take out more of their trade as it goes on, and as the trade goes on for a longer period of time, creating new higher highs and higher lows, or lower highs and lower lows, whichever one they may be in for. So understanding that, okay, I can risk more on this trade, but I'm either going to have a tighter stop loss and a smaller TP, or I'm going to try to just get what I can from this trade, since I am risking a lot more. And if this trade ends up going, let's say less than, or let's say the trade goes out of profit for more than 10 to 20 pips or something like that, just something very, very light, then I will get out of this trade. Simple things like that. But let's say for a faster market, okay, every time the market moves up either 10 pips or 20 pips, I'm going to add more to my trade if I see that it's continuing on in the direction that I am trading in, or I may take a little bit off of my trade. You know, you guys can, let's say you start off with a standard lot size. Every time the trade goes up 10 to 20 pips or something like that, just take off like 0.10 every single time. You know, simple things like that, to where you are consistently collecting profit over time. So even if that trade goes in the opposite direction or reverse, guess what? You have already been collecting profits along the way, that you are still profitable at the end of that trade, even if it reverses and goes back down and hit your stop loss. So that's how people are able to maintain consistent profitable results, because they are continuously collecting their profit. And I always say to my students that you are never, or that money that you see that is so-called profit or in the blue, that is never your money until you close out of that trade. So let's say you're in a trade and you're up 100 pips. Well, that money is not fully yours until you close out of that trade. So you still have to trade as if, let's say you have a $50 account, you're up 150. Even though your equity may say 150, you still have to trade as if you have a $50 account. Do not try to get ahead of yourselves and be greedy and things like that. No, you have to be smart and stay disciplined as that trade goes on. So that's how a lot of people are able to build consistency with a slow and a fast market, and being knowledgeable of their risk management and opportunity management as well. So next, how people are able to be consistently profitable over time, or how to build consistency, is a list of multiple steps, but it is all part of processing your results. So that goes for your wins and losses, the average lot size, or the average size of your wins and losses. Do you win on smaller trades, bigger trades, longer trades, things like that? And then market conditions, understanding, do I trade better when I'm in a volatile market? Do I trade better on a consolidated market? Uptrend, downtrend, things like that. And then also understanding what time of the day you are better trading at. Am I a better trader in the morning, at night? Putting those together is very important when you are understanding what type of trader you are, but also how to build consistent results. So seeing what makes you more profitable will allow you to grow as a trader and become better. But what is more important is understanding, how do you lose your trades? Understanding what trades do you lose the most? So I feel like that is just as important, if not more important, than understanding how do you win your trades. And understanding, okay, I don't do good at this time of day or at this time of night, you know, or simply, okay, I need to make all of my money or try to make majority of my profits for the year in the first half because I don't do good in the last half, or vice versa, because some people do perform better in certain halves of the year. But that's up to you to determine what type of trader you are. And a lot of things can play into that. Like, some people may feel under pressure as it gets closer to Christmas because they know they have to make money to buy people presents that they may love. Simple things like that. You know, all of that plays a part into trading. If you know you are a person that, you know, you want to build up a lot of money around, let's say, the holiday times and stuff like that, then you need to try to make majority of your money or become very profitable in the beginning of the year. So therefore, you don't put so much pressure on yourself later on in the year when it's time to purchase gifts and stuff like that. Because if you put your trading under pressure, you will not perform you will not perform to a high enough level of your liking. You will not perform well enough to get the money that you are looking for to get whatever you need to get. Because whenever you put so much pressure on your trading, it causes you to make crazy decisions. You take trades that you typically would not take. You risk more than you would normally risk. And that is not good for a trader at all. So that's why it's important to understand what type of trader you are. And that is going to allow you to become a lot more consistent. Because if you know what time of day or what time of year you are better trading at, then you know, okay, I need to go harder in this time or go harder at this time of day. So if you trade, let's say for binary options, for example, let's say you trade binary options and you trade really, really good in the morning. All right, you could risk maybe 3 to 5% in the morning time. Collect most of your profits, and then if you want to trade at night, hey, lower that down to like 1 to 2%. Risk 1 to 2% of your account at night. So therefore, you will still save your profits that you collected in the morning. And if you end up winning some more trades, then good, you know, that's just a little add-on. Or if you end up losing some of those trades, it's not hitting your account hard enough to put a dent in the profits that you earned earlier. So that is allow you to stay consistent. I'm telling you guys, it's not about hitting big overnight or hitting big in like a day or something like that. Like, no, it's about what is allowing you to stay consistent along a week or a month's time span. Because if you're able to stay consistent within months, I guarantee you that your account and your trading career period is going to have a big turnaround. You're going to start seeing the profits that you want to see. You're going to be able to wake up in the morning and look at your trading account and you be like, I did this, like, I'm up. So you need to figure out all those things. What strategies work, what strategies don't work. And I'm not saying go test out hundreds of strategies. No. Most of you guys have already found a strategy that works, but you feel like it didn't, and it wasn't a strategy, it was just your mindset. And even I'm a victim of this. I just did it recently. Well, I switched up my strategy on binary options, but it wasn't a strategy. That strategy has made me thousands already. But why did I switch it? Because I was having problems with myself mentally to where it was impacting my trading. It wasn't my strategy. It didn't have nothing to do with my strategy. It was the fact that I started applying my strategy wrong. I wasn't following through all the steps of my own strategy. You know? So all of that is very important to help you become a more consistent trader. Sometimes it's not the strategy. Sometimes it's just you. And if that's the case, then you need to figure out what it is that you are doing wrong. And for some people, it might not even be the trading. It might be what's going on outside of their life. To develop consistency in our mindset, we must develop consistency in our life. We must develop a process to keep us in check. So, what that may be, it could be waking up early at a better time every day of the week. It could be even going to sleep at a better time. Meditating, I speak on that a lot. Meditate on a daily basis. Being mindful. You know, what are some things that fulfill your happiness? What is something that eases your mind? And also constructive talk. Like a lot of us, especially if we blow our account or have a really bad day or week, we talk down on ourselves. Instead of doing that, speak highly. Have a positive mindset. Do not think, okay, I just had a really bad week. I must suck at trading. Like, oh, it's the market fault. I blame the market. It was supposed to do this, but it did this instead. That's not healthy either. Be constructive. Learn from your losses instead. Tell yourself, I may have took a lesson today, but tomorrow is going to be a much better day. Or if it's Monday and you take a losing day, okay, that's fine. It's still the beginning of the week. I still have 4 more days to try to gain my profits back. I still have 4 more days to get better and have much better days throughout my week. It's going to be okay. Okay, I just lost this trade. Instead of me closing my laptop and going to bed mad, what did I just say? Going to bed mad. How about I take a step back, rest my mind, ease my mind, calm my emotions, come back to the laptop and understand, why did I lose that trade? What could I have done differently that could have prevented that loss, minimized that loss, or allowed me to gain better profits? And that could have been being more patient, risking less, you know? So, building consistency in your life is very, very, very important. Not only meditating, learning from your losses, but like I said, doing things that make you happy. Consistently doing things that make you happy will overall give you a better life, give you a happier life. It's simple. You can maybe go work out. If you're angry at the market, go take your frustration out on the weight room or in the weight room. It's a lot of solutions to your problems when it comes to trading. You just have to put in the effort to try to change it around, to change your mindset around. And I know for some of us it's much easier said than done. But is it really a lot of things going on in your life? Or are you just doubtful of the outcome that may come from you changing stuff around in your life? Are you doubtful of how things may turn out if you was to change how you acted? Are you like, it may not change that much for me? Like, can this really change my life for me? Who knows? Give it a try. It won't hurt to try. You know? That's for you to find out, though. Everybody works differently. You have to find out what works for you. So, meditating. If meditating helps you, or if you don't know if it helps you or not, try it. It may help you realize things about yourself that you didn't even know before. It may give you solutions to problems that you probably didn't even know you had, or probably couldn't pinpoint. You know, consistently meditating every single day, at least once a day or 3 times out of a week, it can make a big difference for you. Working out. Yes, it'll benefit you physically, but for a lot of people, it more so benefit them mentally, because it's building consistency in you. It's building consistency in your mindset. So when I was a football player, I had to go to practice every single day. Sometimes we had to get up in the morning. We had to go 2 times a day. That built consistency for me. So when I come to look at my charts every single day, it's easy because I treat it like practice. Even on days where I didn't want to go to practice, even on days where I don't want to look at the charts, I still did it because it built consistency. It's just what I do now. It's part of my life. Small things like that. So, in order to build consistency in your trading results, or in trading period, then you must build consistency in your everyday life. And a lot of you guys know that you do not have anything outside of going to your job consistently. You don't have anything else that you are really doing on a consistent day-to-day basis. So let's try to do something that's outside of the norm for you, and let's try to do it consistently. Whether you want to get into working out, whether you even want to get into drinking water every single day, drinking a gallon of water every single day. That's hard for some people. But if you work on it and build consistency while doing it, hey, it may do something to your trading. You never know. So start by working on that, and then for other people, the last thing that is really getting in their way is themselves. And what I mean by that, it's your ego. It's just your ego. Feeling like you can't lose, or you shouldn't lose, or if you get on a big win streak, you just go crazy. It's your own ego that is hurting you. Not wanting to admit that your losses are your fault and not the market's. That's your ego. Or let's say you really end up losing crazy trades when you leverage the most in your trade, or risk the most. That's your own ego. Because if that's the case, then what's the solution to that? Keep a consistent lot size every time you take a trade. Don't risk less on one trade, end up winning that trade, and then all of a sudden you feeling invincible and you go risk about 10 to 20% of your account, and that's the trade that you end up losing, and now you sitting there like, bro, oh, the market know that I was over leveraging. It knew that I was over leveraging. They made me lose that trade on purpose. They manipulated the market. No, you just wasn't consistent in your risk management. So don't get in the way of your own success. Stay consistent along every single part of not only your trading, but your life. And I promise you, you're going to see different results. So that'll be the end of the video. But if this video helped you guys, or if you guys came to a realization about yourself, then leave a like, comment, subscribe. This is the second episode of Trading Psychology. If you missed the first one, definitely go watch that one because it's probably one of my favorite videos that I've done. But I'm gonna see you guys in this video, man. I'm out.